Today we're going to be talking about top-down analysis. This was a message that I got on Instagram saying, can you hook a boy up with top-down analysis? That's basically how I read it. And so this is why we're going to be breaking it down today. I believe as well, a lot of people really complicate their top-down analysis. I'm going to show you all the things I look at when I'm doing top-down analysis. I've got the trusty whiteboard or blackboard out right now. When it comes to top-down analysis, you need to know whether a price is in a trending market or whether it's in a consolidation market. I know a lot of you guys know what an uptrend is already, but I'm going to go ahead and break it down for those people who don't know. And I'm just going to touch on it. It's not going to be like an in-depth thing. Generally, this is what you want to see. When price is in an uptrend, you want to see higher highs and higher lows, something like this. It's not always going to be perfect like this. This is like the ideal perfect scenario. And if we always got this, then of course, trading would be super easy. Always wait for the retracement. You'll catch a buy within a discounted price at a POY and you take it up to the upside, run out this liquidity up here. And once you run out that liquidity, take partials and then let the rest of your trade ride. Until when you get some kind of reversal sign in here, and then you take it back down to the downside. That would be so simple, but it's not always like that. So now that's an uptrend. So when it comes to a downtrend, generally price is going to be making lower lows and lower highs like this. Lower lows, lower highs every single time. So in other words, it's making new lows every single time. Yeah, you can see this low here is lower than this low here. And then you can see this low here is lower than this low right here. So you can see basically price is making new lows every single time. It's not always going to look perfect like this. It's not always going to look all clean, tidy and proper like this. Now, I'm only just briefly touching all of this. Now, when price is going sideways like this, you can see price isn't really going anywhere. It's just going sideways. It's just going in a little range. Price is accumulating orders before the next move. So this is the scenario where I generally don't tend to trade. And at the same time, I might be in a trade already. So let's just say from down here and price has made its way up. So let's just say I'm in a trade from down here somewhere. Price has made its way up and it's consolidating. I know that there could be a manipulation of the lows, take liquidity and then price runs it back up to the upside, something like that. So generally, I like to be in before price consolidates, because if you're stuck in consolidation, let's just say you bought it from the lows or somewhere within this consolidation here, it's going to be absolutely crazy, because imagine how many times price would have gone in your favor, then drop back into drawdown, then back in your favor, then drop back into drawdown. Guys, this is what kind of throws people off trading. They get caught in consolidation, they trade it at the wrong time, at the wrong place, and now they're stuck in this, and now they have to firm this, and then it's in this kind of scenarios you make all kinds of mistakes. Basically, that's what it's there for. You're going to be getting stopped out, jumping in again, getting stopped out, so on and so forth. And then some people like to do this. So let's just back on out of here. Some people like to jump in from these lows, buys from here and then try to exit, about the top of the range. I don't do that consolidation stuff, because sometimes they run beneath the low, stop you out right here, then they'll move up higher again. And then for the people selling here, they'll stop you out just like that and then drop back into the range. Just another case of you pulling out your hair. It's not always going to look perfect. I know this is a top-down analysis, but I just wanted to show you guys, you have to understand this first. When it comes to the chart now, so I'm on a daily time frame, I'm on GBP/USD. I've got a few things marked up here, but I wanted to break this down for you guys. And I'm going to show you guys how I was able to catch an entry up here as well, but that's going to be later on in the video. So stick around for that too. And then I'm going to share my analysis for what I believe G is going to be doing. What do you guys think price is doing right now? If you just pause the video and just say to yourself, is price rising higher? Is it making higher highs and higher lows? Is it making lower lows and lower highs? Or is price going sideways right now? So just from looking at this, you can see price is making higher highs and higher lows. So from this low to that high, we've taken out this high. We then retraced. After a retracement, we've then pushed up higher above this high over here, made a new high, retraced again, pushed up higher once again, created a new high above this high, and another retracement again, we pushed up higher, and so on and so forth. As you guys can see, look, this, you can see the whole thing is basically price is pushing higher. And every single time it makes a low like this, you have to ask yourself, does price get beneath that low? No. Every time it makes a low, price does not run beneath the low. That low did not beat that low, did not trade through that low. This low here did not trade through this low. That low did not trade through that one. This one here, very close, but it did not trade beneath that one. This one is an invalid low for me, because from this low here, did price make a new high yet? No. So this is why we've skipped this one and moved to this one. Why? Because price rallied higher above this high and then retraced. Once again, did it get beneath this low? No, it didn't even get beneath these little fake lows. And then as you guys can see right now, once again, we rallied higher, created a new high, dropped back into these sell candles. And once again, we're going to see whether we can actually get beneath this low or take price higher. So if you ever struggle to understand, is price moving higher or lower, or if it's going sideways, just ask yourself, is price making new highs And are these lows being protected? That's all you have to ask yourself. It blatantly looks like lows are being protected here. These sells are going to be short term and these buys are going to be longer term. With these sells, when price gets into these down close candles or these sell candles here, you want to be making sure you're taking your profit if you are selling. And that's another thing to look out for as well. Every single time price trades into these sell candles here, this is where you need to be taking off or closing off your full position if you are selling and you're going against the trend. There's nothing wrong with trading against the trend. It's normal. You're going to be taking those buys, you're going to be taking those sells. Some people don't feel comfortable doing that, so don't do it. What I've also done here as well is that I've marked up every single one of these lows and I'm going to have a closer look at them. Just a closer look at these lows to look at how price actually turned around here. Just to give you guys an idea of what to look for when price is within your POI and it's turning around. Because every single time price dropped into these sell candles, you saw some buying. Okay, so it's basically telling us that institutional order flows to the upside. Whenever price drops into these sell candles, you want to look for some kind of reversal sign to take price higher. I'm going to show you something really simple that will help you understand when price is looking to turn around. We're not talking about catching wick entries, although on a daily time frame it might look like a wick entry. We're just talking about what can you see price do that would help you understand that price is likely to turn around right now. We're going to go to this low right here first. Let's go to the 50-minute time frame. This is our 50-minute time frame. I've got this circled round. I know it looks a little bit to the left, but you know, I did draw up in a daily time frame and this is how it looks like. So just forget that this circle is there for now. In fact, let me just move it to the middle. So it's like that. So this is the little portion of price action we are looking at now. When price traded down into our sell candle, do you remember that sell candle we saw in the daily time frame? This is going to be one of your first points of interest for price turning around. And if you get some kind of reversal sign at this point, this is where you should be banking on that. And you have to remember when price drops into these areas here, into the sell candle, this is where mitigation is taking place. So for me, if I'm going to be buying, I'm going to be looking to jump into price or get into a buy trade when price gets into a down close candle or a sell candle like this, because I know mitigation takes place here and I'm likely to have the institutions backing me here. I want to say backing me, they don't care about me, they don't know about me or anything else, but it's just that if they're looking to come out of their drawdown positions here, yeah, then I want to be also getting in on those buys. And so just something really simple that you guys can look at is something like this. You see a down close candle here. You see price move above that down close candle and then we get a return to it here. Why? Because we're mitigating on that lower time frame. Mitigation is taking place on that lower time frame. And if you guys want to know more about mitigation, check out the video I have linked up on the cards. I talk about mitigation. Basically, it's like the missing piece. And that one concept really helped my trading. Right here, look at that. Price left this area, mitigated at this sell candle, and then price pushed off. This is Wednesday, and then this is Thursday. All you had to do was wait for just under a day to catch a move like this and take it to the upside. And I'm not saying you're going to be taking it all the way to these highs and just go from here to this high. We're talking about, that's like 170 pips. I'm pretty sure there's going to be areas that you can take partials at. Now let's look at the next one. Let's look at the next one right here. Once again, same thing. Price rallies higher above the high. When it starts to retrace, let's move this to the middle again. I'm just giving you something to look out for that's very simple to let you know that price is turning around. Here we had a down close candle here. We traded into our sell candle. I know I've not got it marked up here, but this is where our sell candle is. Let's just quickly mark up the high. This is the very highest point. We traded into our sell candle right here. We didn't see this one on the daily. We saw this one. So this is why I'm looking at this one specifically. We have our down close candle here. Once again, price trades, it rallies above. We come back down into it. I'm not saying you might not catch that one. It comes back into it here in London. And then this is where you might have seen that price wants to push off because it pushed off higher. But you might not have caught that trade. Even though everything aligned up, it still dropped into our down close candle in the London session. That's perfect. Okay, absolutely perfect. But look, you might not have got that trade. But then look, there was another opportunity. Price rallied higher again, ran out these relative equal highs, then we traced back down into what? Another down close candle here. Let's just go ahead and mark this up. You're getting a plethora of opportunities to jump in. This is some of the stuff you want to see when you're looking for price to turn around. Just like we saw in the daily time frame where whenever price dropped into a sell candle, it was telling us that institutional order flow was to the upside. It didn't run through the low of that sell candle. In fact, it pushed off higher and took out a new high. You want to see the same thing happening, and you can see it happening all here. A sell candle drops into it here, pushed up higher. Drops into this sell candle here, pushed up higher. So these are things that you want to see. Let's keep it moving. So look, this one's a little bit more harder to see. Price didn't drop back down into the down close candle here. And then you might have missed this move. You're not going to catch every single one from thereabouts to low. You might wait for further confirmations. We're going to keep it moving. That one, for let's just say, for example, it didn't meet our criteria. Once again, so you're not always going to get them every single time. So here, the case is a little bit different. There is no down close candle. For me, this would have been a massive, huge downward play to probably run out this relative equal lows down here. So we might not have caught this one at the time. So here, you see a little imbalance here. Price trades into that and they go, right? They trade into that in and Y. So personally, me, I would have missed this trade. I don't normally trade at this time. And don't forget, we are just looking at all the lows. Now, let's move on to the next one. Move this out to the middle. We have a down close candle. Price rallies through that. We come back into it a few times, the mitigation taking place, and then we go off. After price trades into that sell candle, this is stuff you want to see. Okay, has price produced a down close candle into that sell candle, and now as price trading through the high? Because if it's trading through the high, when it comes back, that's mitigation taking place, and this is where you want to be catching your entries and taking it to the upside. It's not going to happen every single time. It's not perfect. It's not always going to look all, clean, and it's not always going to look perfect, but these are some of the things you want to see. This one here, and once again, what you see a down close candle in here. I know it looks like it's not a down close candle, but look, it's a whole downward play to run out this liquidity here. We then rally higher in here, but don't forget that our high comes in from down here. So we then rally higher. Deep retracement on a lower time frame. There's probably some mitigation taking place on a lower time frame, but we are just looking at the 50-minute time frame at the moment. This is our high on the 50-minute time frame, and this is our low. So look, price comes back into it once. Well, it's come back into it a few times here. Once here, once there, once there. This is mitigation taking place again, and then price pushes off to the upside. Let's go to the 1 hour time frame. Let's get some clarification on what's going on here. So like I said, we identified that as an uptrend. Price has created a low, created a new high. Well, this is our new high right here. Price has dropped back into our down close candle. Remember what I was saying about what happens when price drops into these down close candles? You want to see whether the lows don't get traded below, and you want to see price mitigating here. Let's go up the time frame. Maybe the 4 hour time frame might give us a cleaner down close candle. So what have we got going on here? We've got a cleaner down close candle now on the 4 hour time frame. I'm going to go ahead and mark up the very highest point of this down close candle. I'm going to extend it to the right. This is the very highest point, and this is my lowest point. When price alerts me or gives me the signs that price wants to drop, I'm going to be trading it into a few areas of interest. From this low here to this high, price trades through that. So this is me breaking down the trade I took today on GU. You can see on my Instagram, you can see on my Twitter. Price trades beneath that. I'm going to go down the time frame to the 1 hour time frame. We could even go to the 15, but I'm just going to show you this for now. Then I'm going to go to a time frame low in this. So look at this low. This is an up close candle. Go ahead and mark it up. That's an up close candle right there. Price trades through the low here. And once it does that, this is when this becomes an institutional candle. An up close candle right here. Institutional candle and up close candle, basically the same thing. The moment price does this, gets beneath this low here, this tells me then that price wants to drop back into the range. And so then you have to look at what kind of things do you have that you can use to take price back into the range. So first of all, you have the up close candle, now about the low and the open. And you also have 50%. I wasn't interested in 50%. We've already traded up into this area here. I wasn't too interested in that. Not only that, we had an imbalance here. So let's zoom in now. This kind of 6-week high and that one's low. There's an inefficiency here. You don't want to be this person here. So you don't want to be that person who's doing any kind of support and resistance trading right here. You can see this little rejection sign. Let's go ahead and put this on right here. This support and resistance level. You can see multiple touches. People trade this concept here, but it's always going to be dodgy doing this because, there's things above that need to be cleaned up and it's above that entry. Okay, so this is why a lot of retail concept traders, they're struggling. A lot of retail concept traders struggle. I'm not saying all of them don't. I know retail concept traders who win. One of my good friends trades retail concepts and he's loving it. You understand? And you don't have to force nobody into your mode of trading. You don't have to do that. But just so you know, me personally, I can't roll with that kind of trading. It just never worked for me. The person who's doing support and resistance, they would have got a rejection here. If they were in from this point, it would have caught something decent, I guess. And if they waited for this rejection sign to jump in, they would have been absolutely annihilated. This is why I always wait for what's above that I can use to take price lower. Obviously, this imbalance here or fair value gap is pretty large. It's about 21 pips. For some, that's not large at all. For me, that's crazy large. Let's move this right now. There we go. So I'm always going to be looking to get active somewhere near about the lowest point of the up close candle. And then I'm going to be looking to take price to the downside. And if there's inefficiency here where I can refine my entry, I'm going to go ahead and do that. 50-minute time frame. Now on a 15-minute time frame, what did I identify? Now you're looking at it nice and clear. We're in the same area now. We're talking about top-down analysis right now. And so this is why I'm taking you down the time frame just to show you guys how I was able to refine it a little bit more. Look at this area of inefficiency. We have an imbalance or fair value gap right in here. We've refined this imbalance on a 15-minute time frame. You can see price trades right up into it. I didn't get active here because this was a news candle. Basically, the news came out and then GU pushed off to the upside. So I never caught this move from here. This wasn't me. I didn't jump in from here. But at the same time, what am I seeing? Look, price trades right up into our up close candle. Does not trade above the high. Okay, that news didn't do anything. It just pushed price into our institutional candle. Mitigation took place and then price began to drop. Let's go down the time frame again. 5-minute time frame. Let's go to the 1-minute time frame actually. So when it comes to my entry now, I actually caught it when price traded up into this up close candle here. I caught it the second time it traded up into it on this candlestick here. And I specifically took it to this order block right here. The thing is, I didn't have to hold it any further because this is an area where I expect price to turn around and continue to head up to the upside. Just to add extra confluence to this area as well, we also had our down close candle from the high to the low. We also had that in this area too. So this is why I didn't expect price to go beyond this area. This is why you saw on Instagram, I wanted, I think 25, 28, which was the highest point of this area here, the highest point. 25, 28, the highest point of this order block. I held it a little bit longer so I can get the little tap in to the down close candle too.